Good evening, everyone. Thanks for making time to come and listen to the story. Andrew's with me at the front here, and he'll be around. He'll be around for Q&A. I'll make a presentation, and over drinks and whatever, please feel free to come up and ask questions. Sarah Dees is with us, our IR person as well, who is well equipped to answer any questions you have. What I want to talk about quickly for 20 minutes, I know it's not long, but a little bit about a little overview of the company, who I am, who's involved in the board, what our strategy is, talk about Southeast Asia, because this is a Southeast Asian oil and gas play, and the story is all about that part of the world and why they need E&P companies like Coro, and what the story is for investors within Coro and how we can create value from that. And then talk a little bit about our first deal. So, this is our initial step into Asia. We've just done our first transaction we announced back in September, which is getting into a gas field offshore East Java. So I want to talk about that, what that gas field is, why we're able to get it at the price we got it for, what it's worth, what's going to happen next, and finish up with things you might expect Coro to be doing as next steps. So I'm going to wrap that into 19 minutes now. First of all, corporate overview. Obviously, we're quoted on AIM. Market cap's just shy of 30 million US. Is the way I would think of it. We're actually an Italian producer. So Coro has got gas production in the Po Valley in Italy from 3 fields, and that's its history, is through putting together companies and assets within Italy. We have 2 large institutional shareholders, one of whom is Italian, one of the other of whom is Lombard Odier, so he's quite a well-respected financial institution. And really, it came about by putting together the assets of Sound Energy in Italy, together with Saffron Energy. So it's a combination of portfolios to create this Italian business. However, the owners decided they didn't want to grow in Italy. It's a very bureaucratic country. It's difficult, it's slow. In order to grow a substantial business, it's going to take time. And rather, they would go to Southeast Asia to grow. And that's because a lot of the board and the investor base have experience of Southeast Asia. And that's when I became involved in May of this year. And I was a founder and a CEO of a company called Salamander Energy, which was listed on the main board of the London Stock Exchange, which I started back in 2005, 2006, floated it, sold it in 2015 to Off-Air Energy, which is a much bigger E&P player on the main market. And as you may know, oil and gas has had a terrible, terrible ride since then. So we've been through a rough patch ever since we sold that company. We've now come back out. Commodity prices are looking quite strong. It's all looking much rosier. So I was asked to get involved back in May, looking for business in Southeast Asia. We've now made our initial steps in growing that business and that portfolio. So in terms of our strategy, we want to use our network, and we have an Indonesian on the board, as well as myself. James Parsons, who's the chairman, is well known as the CEO of Sound Energy. I first came across James in Indonesia, doing deals with him. So we utilize our network. We want to utilize the position we have in Italy as a calling card, if you like, for growing a business out there. And we want to create value from the assets we have. So Italy has value, it's just very small. And I can show you how that's transformed the position within Coro overnight, if you like, with our first deal. But first of all, Southeast Asia. I think this is a story you may be familiar with. This is an area that's got huge growing demand. So this part of the world, Indonesia, Malaysia, Vietnam, big populations, young populations, a growing middle class, and that leads to strong GDP growth rates. And when we look at energy, we always look for GDP as like your big macro indicator, because where you need GDP growth, it needs energy, and that means where's it going to get it from? Generally resources. And so if you look at the GDP growth rates in these countries relative to the developed economies of the West, they're radically different. And so that means demand for resources is radically different as well. However, supplying that, which is mainly coming from coal, but also oil and gas, and particularly gas is forecast to be the strongest growing element of that energy mix, we see that the countries in that part of the world can't satisfy their own demand. They have been big producers. You may be familiar with LNG, which is shipped out. We import it here in the UK. But the earliest LNG exporters were in Southeast Asia, Indonesia in particular, but also Malaysia, very, very large LNG exporters. But they can't satisfy their own demand and export at the same time. So there's a real supply side restriction. which creates an opportunity. It basically drives prices up. So we've seen over the last 10 years, gas prices in particular rise quite dramatically in these countries. And where, now in Indonesia, it used to be $1.50, $2. Now we're looking at $6, $7, $8 an MMBTU, which is the unit of energy we measure for pricing. In the West, we've seen probably depressed prices, not overall. They're much more volatile. But we don't see that same level of support. Certainly Henry Hub, which has been volatile, has kind of been a little bit depressed of recent times. So we see strong support for gas prices as a macro backdrop to this part of the world. When looking at what is the opportunity for an independent like Coro, a relatively small company that's technically led, I'm a geologist by background, and a lot of the team are engineers and geologists. We look at on this chart, we're trying to show the countries in that part of the world, what they need versus how are they going to fulfill that. So on this slide here, we look at these countries, Indonesia, Malaysia, Vietnam, Thailand, etc. This is their demand in red. This is millions of standard cubic feet a day. So it's roughly about 15 to 20 BCF, billions of cubic feet a day, is consumed by these countries. And this is the supply that they have. And you can see there's a gap has emerged where they can't fulfill that requirement. At the same time, they export LNG. So on this right-hand slide, this is the same demand, and this is how are they fulfilling it. And at the moment, it's contracted pipelines. So that's pipe gas being sent to the demand center, the power plant, the petrochemical plant, whatever it is. But looking forward, they're going to have to utilize either uncontracted gas, that's gas that's already been found, but has not yet been commercialized, or they're going to have to find new gas, new discoveries. And it's really this is the opportunity for the independent company. The big guys, the majors, the BPs, the Shells, Total, Exxon, generally are exiting this part of the world, leaving a space behind for smaller companies to exploit. And this is the opportunity for independents like Coro. The stuff we're looking for is too small for BP, but the domestic companies don't have the technical wherewithal or the capital base to exploit it themselves. So we're left with an opportunity set, and we're able to come in and both do two things: pick up assets that exist, gas in the ground, and also explore for new resources. So I want to talk a little about our first deal in that context, and it's an interest in a gas field in East Java. And we picked it up, we believe, at extremely good value. Just a quick word on how it's transformed the company overnight. This is we measure, in oil and gas, we measure our resource base in 2P and 2C. They're basically units of measurement for the resources that you have in your back pocket. Before transaction, we had 32 BCF of resources. After this transaction, we have 186. So with one deal, bang, we're many multiples larger in physical scale. Look at the production rates before and after, and the earnings potential. So the cash generation potential of this asset, we're up sort of 600% plus in one transaction. Now that simply isn't possible in Italy. You can't, it's impossible to find deals that will do that for you in this sort of time frame that we're talking about. And so it's kind of indicating why, the company decided to switch attention back to this part of the world. The transaction itself, I won't go through the minutiae. As Roland was saying, you'll get this presentation. It is explained on our website, and it's a little bit of a complicated deal. But when the dust all settles, we end up with 42.5% of this asset. We call it Bulu. That's the name of the license, and within that license, there's a gas field called Lengo. So you'll see Lengo gas field and Bulu PSC bandied around, but basically it's the same asset. We have an operator called Chris, so where it's a non-operator position. As I mentioned, it's a slightly complicated deal, but the rocks are good. So I like deals which are commercially a little bit complicated because it puts people off, but have very good fundamental rocks. So the quality of the resource is fine. Because we can always cure the commercial arrangements, but we can't make the rocks better. They are what they are. So we'll end up with this interest, and we're paying $12 million for it overall, part in cash and part in shares. It's $8 million in cash, $4 million in shares. But effectively, that translates to around 10 cents an MMBTU is what we're paying. I'll come on to some of the metrics, because when we look at gas prices, we're going to be seeing quite a hefty margin, which means we're buying this very cheap. I'm not going to dwell on the technical aspects of this. I'm happy to take Q&A if you want to talk a little bit more about it. But suffice to say, this gas field it's obviously been discovered already. It's been appraised with a second well already. Both of those wells have been flow tested, so we know the gas is going to flow. It's found exactly the same reservoir. It's been cored. In other words, we physically have taken the rock out of the earth and we have it in the laboratory so we can examine it. It's got 3D seismic over the entire thing, and it shows up very nicely on 3D. And so what this means to me is actually this is quite well understood. I don't think we're going to drill a well here and get a nasty surprise. I think we know what's in this resource base, so it's pretty secure. And when young companies, small companies do deals, the one thing you want to do is make sure your first deal is something that isn't too risky. But we're spending $12 million and we're getting 42.5% of 350 BCF. If we drilled an exploration well, we could spend 12 million drilling an exploration well easily, and if we found 350 BCF, we would be delighted. But here we are, we've spent the money, we've actually got a field which is not only appraised and discovered, it's also got a POD, a plan of development approved, it's got seismic all over it, it's got a cost pool of $100 million. So people before us on this license have spent $100 million already looking for this. We're walking into it for 12 million. We get access to that cost pool. So in the economics, we can recover our share of that cost, which makes the economics extremely strong. I probably won't dwell too much. It's shallow gas. I can talk to those interested about the geology and geophysics of the field, which are interesting. Probably of more interest to you is what can we sell the gas for? And this is off East Java. It's a very industrial area of Indonesia. So if we go ashore from here, we're 60 kilometers offshore. We'll find petrochemical plants, we'll find fertilizer, we'll find power generators, refineries. They all want your gas. And we've already seen that there's a supply gap looming. So there's a lot of demand. And that means gas prices in this part of the world are quite strong. We're talking about a gas price expectation of between $5.50 to $8 an MMBTU. And we've paid 10 cents. So now, we're going to have to do some development here. We're going to spend money to get this out of the ground and commercialize, but we've still got a massive margin. So what that means in terms of value, I'm going to show you. If we look at the region of East Java, and rather as I was showing in the Southeast Asian region generally, just focus on this part of Indonesia. This is the numbers from the government and our knowledge, but the existing supply is falling off. So gas supply in East Java is in decline right now. There's a bunch of gas fields that are waiting to come on stream, including our own, this Lengo field. And that is shown in this color here. But demand here is up here. So right now, they don't have enough gas. They're having to get pipe gas in from elsewhere, or they're looking at LNG import regionally into that part of Indonesia, but they simply don't have enough gas. And that means gas prices are strong. So $5.50 to $8 an MMBTU, as I mentioned. Okay, just before I look at this funny egg-shaped chart, I just want to talk about these numbers up here, because this really tells you the story. We're paying 10 cents an MMBTU. That's a million British thermal units, which is the calorific value of the gas, if you like. We're going to have to spend 80 cents to $1 an MMBTU to develop this field. Then OPEX, the operating costs of running it, are about $1.10. But the gas price is around the $5.50 at the low end to $8 at the top end. And to be honest, most of the conversations around the gas price are somewhere in the middle of that. But that gives you a big window of margin that we can enjoy. And so we pay $12, and what I'm trying to show on this chart here is the envelope of value, if you like. So we have a base case, what we think is in the ground and how much we think we're going to spend to develop it, versus an upside case of, maybe it goes a little bit better with the rocks, maybe it's not quite as expensive to develop, we would like to think. And we plot it against the gas price on this vertical axis. So $5.50 to $8, as I mentioned. And we end up with this kind of area here. And on here, we've got the NPV 10 of the project, net to us. This is net to Coro. And I've also expressed this in share price terms to make it direct translation for you. We see the most likely value of this asset today as being between $50 to $70 million. That's the value, the NPV 10 value of it as we sit here right now, before we've invested into it. We only paid 12 for it. So it illustrates for you that there's a shortage of investors in this part of the world as well, actually, in this sector. The industry's had a horrendous 3 years. There's been no capital coming into this part of the world in this sector. It's now starting to appear. So we've started to make investments. Other E&P companies have started. Ophir, the company I mentioned a little while ago who we sold Salamander to, recently announced a transaction to buy Santos Southeast Asia. Santos is a big Australian gas company. Sold its Southeast Asian position, $205 million to Ophir. So they just announced that deal about the same time as we announced this deal. We've just seen OMV, the big Austrian national company, make a big splash into Malaysia. So industrial money and public market money is starting to appear in this part of the world. That means prices for assets is going to go up. But right now, there is an opportunity to come in to unlock some of these deals where nothing's happened for so long. It's been starved of investment, and that means you can pick up things at very reasonable valuations. So we pay 12, we think it's worth between 50 to 70. In share price terms, that's probably around 7 to 11p a share. Right now, we're trading around 3p. So these are highly value accretive transactions to make. If I can spend 12 for things that are worth 50, I'll do it all day long. I mean, that's a private equity style multiple straight away. And we would think as we do more of these, so Coro, and I'll come on to what to expect, but Coro is basically in the business of building a portfolio. Right now, we've got an opportunity to pick up assets at good value. We will get bigger in physical and financial scale. And in doing so, your discount gets unwound. So not only are we buying cheaper assets below what they're worth, really, but also as we grow in scale, the public market multiples will get that double benefit. So we get a kind of an expansion on multiple, if you like, in that way. So as I mentioned, the area's been starved. We've seen some public market money return. Jadestone, I didn't mention, but Jadestone Energy listed on AIM, or was introduced to AIM, probably about 2 months ago. They raised over $100 million for a deal. So suddenly financial institutions in London are quite interested in this part of the world. It's just starting to light up a little bit on people's radar screen. So we're not alone. I wish we were, but there is competition out there. But it's a big region. There are a lot of assets. There's lots of things to chase here. So I would characterize this as being a very strategic deal. It fits our strategy, but at the same time, we're getting it at good price. I didn't really dwell on the mechanics of the deal. It is a little bit complicated, but there are other deals out there that also have those characteristics, and I think that's what I look for. I'm kind of attracted to those kind of things that aren't quite so obvious to everybody, but which you can unlock. And in Salamander, when I built that company up, we did exactly that. We liked things that were a little bit difficult, and something about them that put other people off. But fundamentally, the rocks were good. And we were picking up assets that we thought were 15, 20 million barrels that turn out to be 70, 80 million barrels. And that's how you create value in this part of the world through E&P. And there's been quite a number of success stories of small independents in Southeast Asia that have done their shareholders a fantastic job. So we're not blazing a trail in that regard. It's just that since the downturn, there hasn't been anybody. And now the independents are starting to reassert themselves. I have romped through that quite quickly. I think we've still got 2 minutes, as I can see on this clock here. But yeah, I mean, Roland, if you... Yeah.
Well, thank you very much. If we're done, let's move on to questions. And as I said, if you have a question, please raise your hand and wait for my colleagues, Peter and Chris, to come over before you ask. So, gentlemen here, please.
Just very briefly, I missed, I think, what's an important part. I heard that the value of the share is 3p.
Yes.
With this mid-range value, what did you say that equates to in terms of share price?
Let's. I can't go.
It'll come back up.
Okay. In short, we see the value of this asset. Oh, there we go. As being somewhere between 7 and 11p. That's the value of this asset that we've acquired today. Okay. Our net share of it's worth between 7 and 11.
4 times.
Yeah, I mean, I wouldn't say the value of our shares is 3p, but that's what we're trading at. Okay. So yeah.
Question here, please. Thank you.
Thank you. And what would the Italian part of the business be worth in terms of millions of dollars?
It would be dwarfed by this by quite a long way. I think we had an emission price, I'm going to defer to Andy, of about 4.38p when the business was created.
Correct.
And that included the Italian asset. That was the Italian assets plus cash. And what we're doing with this deal is we are transferring some of that cash, not all of it, but a chunk of it, into an asset in Indonesia. So, and I think the cash amounted to what, Andy? About
14 million pounds.
14 million pounds. So you can back calculate it, but you can see that, you know, with this deal, we're sort of dwarfing the Italian position. And by the time we do the next one, it's going to become de minimis in our portfolio.
So on a sum of the parts basis
Yeah.
for the whole company, if you're assigning, was it 70 million for the East Java
Yeah.
thing?
At the top end of that range, it would be 70 million.
And you said cash was equal to...
Well, we had about 14 million of cash. We're going to spend, and that's in pounds sterling, we're going to spend 8 million in cash in dollars on the transaction. So our cash pile will shrink.
Yeah.
We've still got plenty of cash to, you know, to keep going. But
So that's 70 plus 10, say, plus how much for Italy?
well, I mean, you know, if you start adding up the high end of everything, you'll end up with a very big number. But even look at the low end. Let's be conservative, and look at the low end. You know, you're talking about 7p a share here, just for one asset. You throw in Italy and the residual cash, you're probably up at 10p, unrisked. But you know, that's 3x from where we are right now.
Thank you.
Okay.
Gentleman over here, please, Chris.
Hello. Quick question about infrastructure. What's your plan for getting gas to shore? Have you got the infrastructure, or are you going to have to put pipeline down?
Yeah, you will have to put pipeline down. There's essentially two routes. One is to build your own pipeline to shore. So it's about 60 kilometres, 65 kilometres, and then probably a little bit of an onshore piece, which is what we're planning on. So in our economics, we've assumed we do that. There's also a gas field, it's 20 kilometres away, offshore, who are short of gas right now. They're contractually obliged to deliver gas to a buyer, and they don't have it. So one option we're exploring is, why don't we just sell our gas to them and put a pipeline 20 kilometres to their platform and sell it direct to that platform, which would be a lot simpler for us and a lot less costly. Of course, you have to get the Indonesian government to approve that, and it's not quite as simple as we'd like to paint it, but that would be a great outcome if we could do that. But we have assumed in our development expenditure 65 kilometres there, plus there's some CO2 in the gas. So we're going to need quite thick steel to get it there. It's a 20-inch carbonised pipeline. So yeah, it's a chunky piece.
Sorry, you mean the CO2 is corrosive? Is that?
Yes, yeah, it will be. Over time, it will corrode. So you have to protect the pipe and have quite a thick pipeline to deliver it.
That's quite normal.
Yeah, exactly. It's in East Java. It's a CO2-rich area, so we're not. You know, every field's got CO2 in it to a greater or lesser extent. We're kind of at the good end, but yeah, it's a common problem.
Question at the back, please.
Do you have a target date for production
Yeah.
from the field?
Yeah, I think it's forecast to do 70 million standard cubic feet a day on plateau. So our net to us will be around 30, just north of 30 million standard cubic feet. So if I put that in oil equivalent terms, it's going to be around 5,000 barrels a day net in oil equivalent basis. So often E&P companies talk about barrels of oil equivalent per day, and so you know that'll be the sort of area we'll be at, and around 20 million barrels of reserves.
So when are you expecting production to commence?
Yeah, we've at the moment, so we've got a plan of development approved. We're negotiating, or the operator's negotiating for the gas sales agreement. Once we have that, we'll start the development proper. So I'd expect that to begin next year. You're probably going to be developing through the second half of 2019, 2020. You're probably getting on stream towards the end of 2020 and plateau 2021. So it's quite a way down the road. But you know, we are in the business of building a portfolio of these things. So it's, you know, what you shouldn't expect Coro to do is just sit here and wait for this asset to come on stream. That's not what we're going to do. But it's going to be an important element of the business we're creating.
Was there a question at the back there, please? Question there, please, Chris.
Thanks. You were going rather fast.
and I may have just missed this, but how much more money are you going to need actually to get up and running? At the moment, you say you've got 14 million pounds in cash, but I think you said you'd spent 12 million of it on the dollars on the acquisition.
Correct.
So say 9 million, 5 million left. How much do you need to get up and running?
Oh, well,
and will you do it by placing more shares?
We would say we're up and running already, so we don't need any money right now to, to do what we're doing. However, to develop the field, we're estimating $200 to $250 million gross, that's a gross figure, not our share, of development costs. So every field development, has a cost associated with it. Actually, the vast majority of that will be debt financed. So these projects are very bankable, and there's a big lending fraternity out in Asia, mainly dominated by French banks, funnily enough, but they're very willing to lend. They won't give you 100% of the cost, but I think they'll be up at around 70% or so. And then we would look for vendor financing as another common route people use, where people who provide services to you get paid out of production down the road. Depending on the state of the industry, at the time you're developing, some people are very keen on it, others not. It comes with a cost. That may not be cheap financing. And then ultimately, yes, there may be a bit of equity, but it certainly won't be anything like the gross figures we talk about here. But we're not out looking for money at the moment. That's not our deal.
Gentleman here.
James, is there any political risk in this part of the world? Is there a sort of Indonesian Jeremy Corbyn in waiting?
It's totally risk-free, I think you'll find. Not a problem. I don't think there's a Jeremy Corbyn out there, I'm afraid. No. They tend to be, Indonesia. Let's talk about Indonesia and Malaysia, because they're the two countries we're number one focused on, and Vietnam latterly. But Vietnam's a communist country, military rule. I can tell you, if they're going to do something, they do it. There's no debate. It's as far removed from Jeremy Corbyn as you could ever hope to find. But in Indonesia, there's a presidential election in April next year. Historically, Indonesia has been the army, the church, the Muslim faith. And then you have a sort of a democratic arm, if you like, and they've kind of coexisted quite happily. Power does shift between the three of them. At the moment, you've got Jokowi, who's a populist president that's leading things. I think everyone's reasonably happy with him. Strong chance he'll probably come back again, but I don't think there's any candidate out there that's going to shock anybody. Malaysia, a very different story, where we've had Najib in power, who is now, looks like he's going to be put on trial for corruption. And Mahathir's come back in at the age of 93 and kind of make a clean sweep and really transforming the National Oil Company, and heads of business across the country have changed overnight. To me, it's a very, very positive step. I mean, very positive step. We can see a difference in the way Petronas deal with us straight away. So, I think it's a very strong thing. But, of course, it's emerging market risk.
On that note, we're out of time. Thank you very much indeed. Thank you, James.
Thanks.